Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun, looking at charts, like the charts behind me. ChargePoint closed below $1 a share on Friday, the 14th, the day after the 13th, which was Valentine's Day. And yeah, it went up about 3.6% on Friday. And then if I look at this, I'm just going to remove the drawings for a second. If I look at this over the weekly time frame, I wasn't really expecting this, but it does look like it put in a dragonfly doji at the base there. I was curious to see how much it went up over the course of the week. But really, it just, started the week at a price of 82.82 and then came down to 66.20 and then closed at 81.47. So very nice dragonfly doji there with the open and close being very close to the same price, very near the top. And so that's potentially a bottoming signal. So I think that looks really good. Also, what might seem, and this might be my bad volume analysis, but kind of what I see with this is that, we see stock price coming down, so that's bad. So we don't want to see large volume when the stock price is going down, because that just suggests that it's going to continue. And with stock price going down, I would think of, candles like this or candles like this that are very big, open very high above, down 12%. To close the day, and then these are the weekly candles though, and then so a couple weeks ago we opened at 93 cents, came down over 15% over the course of the week. And so, with kind of candles like that and high volume, I think that's bad. That is probably going to continue to go lower. But what we see here is much higher volume over the past week. So that's potentially bad, but what do we see in the stock price? We potentially saw a bottoming signal with this coming down, so that doesn't look so good with high volume, but then it closed higher. So that suggests the high volume of the selling that brought the stock price down resulted in high volume of buying, pushing that stock price back up. So I think that's potentially good. And then let's see over here. We do have, let's see, lower lows being formed over here. We do get a little bit of a blip up here, but then we do continue with a lower low. What do we see with the RSI? Over here, we see, going back all the way over here, we see lower lows in the stock price. What do we see in the RSI? The RSI over here on October 27th was, 22.57, so well below 30, which is oversold. And then, the dips over here, we see RSI getting higher. So this was, 22.57, then over here, 24.68, 27.25, 28.86, still in the oversold territory, but gradually getting closer to being out of it. And now what we're seeing with this bottoming signal on the weekly, we are seeing a low in the RSI of 31.29, 31.32 for the past couple weeks. And, that being met with high volume. So that makes me think that a bottom is potentially in with this. But let's look at this on the daily. And so we can see, over the past week, coming out of the prior week, we saw the stock price coming down, lots of volume, so that doesn't look so good. But then that increased volume with that pullback is then met with more volume, but to the upside. So that makes me think that 66.20 could potentially be a bottom, or that we're very near to forming a bottom. Not there yet, though, in my opinion. And so I'm just going to throw up some drawings I previously put up here. One is going to be this purple downtrend. I believe I've talked about this before. It is based on the closing price from September 9th, that being the initial pivot point. And then over here, I've got the closing price from November 13th, that being the other pivot point. So we have gotten some closes at that level, some opens and closes along that level. but no real trading below that level back here, other than just some wicks down, no closes or opens below it. But then what we started to see is a breakdown. We saw a breakdown on February 7th. We saw an 11.68% down day, breaking below that. And then we saw this bounce, which is met with a good amount of volume to push that back up on the weekly, giving us this nice dragonfly doji. So I think that's actually looking pretty good. But we have bumped into that purple downtrend that was previous support. I think now it's going to be acting as resistance. So the high on Friday was at a price of 85.77, just below that downtrend. I can make that downtrend a little bit. Actually, I can't make it thicker. It's as thick as it can get. But, we kissed that level, got very, very close to piercing it. And so, I think that we're going to be seeing a rejection from it. And so with that being said, I do have this Fibonacci retracement drawn up here. And we got some levels to the downside. The 382, I think that's probably not going to be the bottom. That is at a price of 78.29 cents. I think we're probably going to go lower than that. So I'm just going to remove that level so it's not going to distract us. Let's see. I got this moved over here. And so, yeah, the 382, I'm going to remove that one. And then below it, the 50%. So I was actually thinking, I had actually sold some cash secure puts a couple weeks ago. They closed in the money, so I had to buy some shares below $1 a share. That was good for me because it got me to, start buying again a little bit more aggressively, but I could have bought lower. Could have bought at 66.20. That's fine, though. I bought below $1. I feel good about that. And so I was thinking, this 50% retracement, that seems pretty appealing, 76 cents. But the reality is, I think it's probably going lower than that level too. But I do think that's a good level to note, so I'll leave it up here. Coming down a little bit further, we have the golden pocket here, so that's the 618 down to the 65% retracement from a range of about 74 to 73 cents. I think it could be coming down to there. I think it could be finding support there with this kind of consolidation here over these 3 days with this wick in the middle piercing that golden pocket but getting rejected from it, and then these two candles overlapping with that level. So there's a decent amount of support there. I could see that. But, for me, what I would like to do is I'd like to add more aggressively around 70 cents. And so what we see here is the 786 at 70.39 cents. To be honest, I'd like it to go a little bit lower than that. I like it to get to 69 cents just because I think that's funny. But, it may not. And so what I plan on doing, I believe, I'm not sure. I don't have any orders placed just yet. But, I'm kind of contemplating, do I want to sell a cash secured put to collect a premium of 30 cents to then buy 100 shares at $1? If it closes below $1, that would put my average at 70 cents. Or do I just want to have a limit order placed at 70 cents? I'm not really sure. I got to think about that. But yeah, those are some levels to the downside that I think it could be pulling back to. Let's see, just looking at this on the daily, I was talking about bullish divergence on the weekly, but do we see that in the chart over here? Potentially, but this is kind of longer term. Over here, from this low, that was at a price of, it looks like that's a trend line there, but the low on that day, which was April 22nd, the low was $1.21. That's approximately the yellow line there. And so with that low, we definitely see a lower low over here. What was the RSI over here? The RSI on, let's see. Well, I'll just go to the lowest portion of that RSI, 2265 it looks like. And the RSI over here was 2377. So, bigger picture, probably what stood out on the weekly is that we do have a lower low in the stock price, but in the RSI, we, as of right now, still have, a higher low, just like what we saw on the weekly. So there's some bullish divergence, but following this low, what we see is, lower, let's see, this, yep, okay, so I just wanted to see if this was lower. And so, yeah, we do see some lower lows following that. This trend over here, this purple downtrend that I was just talking about. But what do we see with the RSI? We do see a lower low in the RSI, so there's no bullish divergence there on the daily. So what that means is maybe we take out 66.20, maybe we don't. I think that a pullback to 70 cents seems likely. Most definitely, I think 76 is going to be hit. So I would be looking for dips in those ranges. And if we do get below 66.20, there's just going to be a little bit more pain with this one. But I think that it would make sense for us to be able to break back above this downtrend. And one thing I want to do, I'm not going to look at too much nitty-gritty options data or anything. This is a contract that I have that I think is probably going to zero, most definitely going to zero. It's a $2.50 strike, expires May 16th. I put enough in it that if I lose it all, I'm not going to sweat it. It's not a big deal, but I think I might lose it all. If ChargePoint does spike, though, I'm going to GTFO out of that position at break even. But anyways, what I wanted to look at, I didn't necessarily want to look at this net call put premium, but this actually does look bullish. If we do look at the bear bull slider here, 54% on the bullish side, so that's looking good. And what we can see in the data here is elevated volume over the course of the day, suggesting that there's buying of contracts, whether it's calls, whether it's puts. I don't know, based on just looking at this volume. But what we can see looking at the data, we got yellow, that is the stock price, how it traded over the course of the day on the 14th. But what we see that actually looks bullish, what makes up the bullish side of this bear bull slider, is that we see the net put premium in red being negative for all of the day Friday and then closing pretty negative over here, whereas with the call premium, virtually all of the day we saw net call premium being positive, other than this little dip here, but then it did end the day positive. So what that's telling me is that this volume represented the net buying of calls and the net selling of puts, with the majority of the contracts being bought the majority of contracts being exchanged being calls, going long, buying them. And so the way that you can think about this, that I'm trying to, wrap my head around it, we see the net put premium coming down. It's really not that much money, $16.9 thousand. If it was millions, that would be a real tell, but this is a smaller stock trading below $1 a share, and so you got to take it with a grain of salt. But that net put premium is down about double what the net call premium is up, which is up by 8.92 thousand. So you can see those numbers over here, and the volume over the course of the day was 2.76 thousand, representing this increase over here. And so that's telling me that there were fewer puts being sold at a higher premium, so people taking profits that could be a bottoming signal, whereas what we see here with the net call premium, we see higher volume, which is represented by this volume down here. It's green, suggesting buying, which is reflected by the net call premium increasing. And so that makes me think that these calls are being bought cheaply. They have a cheap premium, so, it's like buying the dip, buying when something's cheap, with the expectation that the value of those calls will go up over time. So that's another bottoming signal. So this just looks really good, but I did not want to dive into the data here. What I wanted to look at was the Greeks. So looking at the max pains over here. And so for February 14th, max pain was $1. As we all know, we closed below $1 a share on Friday. And so that's too bad. We closed below max pain. It's unfortunate. This upcoming Friday on the 21st, max pain is $1.50. So do I think after closing below max pain that we will be moving up to $1.50, which is right around this red line here? Do I think we're going to get that kind of move, which is about 100% move over the course of a shortened 4-day trading week? No. So I think that we're going to be closing below this upcoming max pain. That's bearish, short term, nothing too huge. Over the course of the next week, I think this is pulling back to, like I said, 76 down to 70, ideally 69 cents. But, I got that alert there. It's the magic number. But anyways, if we look at the week after that, February 28th, max pain's 50 cents. It'd have to come down. It looks like 38, almost 39% to be in the money there. And we're actually above that. And so what I think could happen is we could start to see a pullback, closing below max pain again for this upcoming Friday. But then with this 50-cent strike, I think we could be closing above that. And maybe that starts to trigger what could be a gamma squeeze. The week after that is $1. And that's not too unreasonable of a price for us to get to. That was this past Friday's max pain, closed 19 cents, less than 19 cents below that, which is, granted, that's, 25% of the current price. So that's a notable amount. It's a drawdown of about 20% from the max pain. So, like I said, I think that this is what we could be seeing with it. I'll just draw it out. And so I'm hoping it comes down to around 70 cents. And then following the max pain of $1.50, maybe we get back to above 50 cents. This is all above 50 cents. And then closing above that, maybe that is what is able to trigger us to get above that downtrend. And then we get close to $1 a share the following week. That would be the 28th, I believe, getting up to around 92 cents where that 12-day moving average is. Then we pull back to test this neckline. Not neckline, that purple downtrend, and then bounce from there, corresponding with the Friday, that's the second Friday in March or the first Friday in March. I think the max pain is 50 cents. And then we could, trigger some more gamma action to the upside. I think I've been talking too long, so this is not, respecting my narrative. But yeah, from this, I think that it could then trigger it to get above $1 a share. Maybe, I got a couple lines there at $1.08, and then maybe it does that. I don't know if I can draw the other part of that arrow, but you kind of get the idea there. And so, yeah, let's actually think about this. I'm just going to map this out. I find this to be interesting. The max pains. So, we close below $1 for this max pain. It's unfortunate. And then if we look at the 21st, that is where the max pain is $1.50. So I could actually see this taking more time. I think that this is kind of a scrunched view of how this could happen. And so actually, yeah, earnings on March 4th. Max pain a few days after that. For March 7th is $1. And so, yeah, I think that with this 50 cent and then the week after 50 cent, we're oscillating between $1 and 50 cents, until we get to May 16th, $1.50. So I think we could definitely be seeing a gamma squeeze. Do I think this is going up to $2.50? No. Not in the short term. Do I think this is going up to $1.50? Maybe over the course of the next couple months, maybe by May, I think it could be up around $1.50. But I also think that we could be breaking below 66.20. So good to be keeping that in mind, good to be planning for that. But I think that over the course of the next week, we will be seeing some dip buying opportunities before we see maybe a little bit of a gamma squeeze or gamma ramp, followed by another little bit of a pullback, followed by what could be another gamma move triggered by, closing above these max pains over here. So we might be oscillating between closing above, closing below, closing above, and inching our way higher. So I'm feeling really good about that. But I'm just going to throw this up because, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this.